Tax benefits for homebuyers in the U.S. As a homebuyer, you may qualify for several tax benefits that can save you money. These incentives aim to encourage homeownership and make housing more affordable. Here's a breakdown of the key tax benefits available in the U.S. Mortgage interest deduction. What it is. You can deduct the interest paid on your mortgage from your taxable income. Eligibility applies to mortgages for primary and secondary homes. Mortgage must not exceed $750,000, $375,000 if married filing separately, for homes purchased after December 15, 2017. For older mortgages before 2017, the limit is $1 million. How it works: if you pay $10,000 in interest annually and fall in the 24% tax bracket, you could save $2,400 in taxes. Note: you must itemize deductions instead of taking the standard deduction to claim this. Property tax deduction. What it is. Deduct up to $10,000, $5,000 if married filing separately, in property taxes annually. Eligibility applies to both primary residences and investment properties. The deduction is part of the state and local taxes, SALT limit. How it works: if your annual property taxes are $8,000, you can deduct this amount to reduce taxable income. First-time homebuyer tax credit, if reinstated. What it is. Programs or proposed legislation may offer credits for first-time buyers. Current status: the federal first-time homebuyer credit, up to $8,000, ended in 2010. Some states still offer tax credits or grants. Check your state's housing authority. Mortgage insurance premium, PMI deduction. What it is. If you pay private mortgage insurance, PMI, or FHA, Virginia, or USDA loan insurance premiums, you may be able to deduct them. Eligibility: income limits apply. Phase-out begins at $100,000 for joint filers, $50,000 for single filers. Only applies to loans originated after 2006. Status: this deduction is periodically extended by Congress. Check if it's valid for the current tax year. Home office deduction. What it is. If you use part of your home exclusively for business, you can deduct expenses like mortgage interest, utilities, and repairs proportional to the office's size. Eligibility: must meet IRS criteria for exclusive and regular use. Applies to self-employed individuals, not available for employees working remotely. Capital gains exclusion. What it is. When selling your home, you can exclude up to $250,000 of capital gains, $500,000 for married couples, from taxable income. Eligibility: you must have lived in the home as your primary residence for 2 of the last 5 years. Tax benefits for homebuyers in the U.S. If you bought your home for $300,000 and sold it for $550,000, you wouldn't pay taxes on the $250,000 profit. Energy-efficient home improvement tax credits. What it is. Tax credits for making energy-efficient improvements, such as installing solar panels, energy-efficient windows, or heating systems. Eligibility: energy-efficient home improvement. Credit: up to 30% of qualifying expenses, for example, for windows insulation. Residential clean energy credit. Covers up to 30% of costs for systems like solar panels through 2032. How it works. If you spend $20,000 on a solar installation, you could claim a $6,000 credit. Points deduction. What it is. If you paid discount points to lower your mortgage interest rate, you can deduct the cost in the year you purchased the home. Eligibility: points must be a percentage of the loan amount and paid at closing. Tax benefits for homebuyers in the U.S. If you paid $5,000 in points, you could deduct that amount. Home equity loan interest deduction. What it is. You can deduct interest on a home equity loan, or HELOC, home equity line of credit, if the funds are used to buy, build, or substantially improve the home. Eligibility: the combined mortgage and home equity loan must not exceed $750,000. State-specific programs. Many states offer additional benefits, such as mortgage credit certificates, MCCs. Provide a direct tax credit on a percentage of mortgage interest paid. First-time homebuyer assistance includes grants, tax deductions, or credits. Tips for maximizing tax benefits. Keep records. Save documents for mortgage interest, property taxes, PMI, and closing costs. Consult a tax professional. Homeownership tax benefits can be complex. A professional can help maximize savings. Itemized deductions. If your itemized deductions, including mortgage interest and property taxes, exceed the standard deduction, you'll benefit more. For personalized guidance, please reach out. The award-winning Realtor, Syed Firoz, at 470-269-0420 or email sphirozrealestate@gmail.com.